I want to share with you which sector in the US and their respective ETFs will be able to benefit the most based on the potential policies that either Kamala Harris or Donald Trump would favor, so that you will be able to win regardless of which party wins the US election. With Kamala Harris now leading the Democrats, the race between her and the Republicans is tighter than ever. Whether you watch this before or after the election, the policies from whoever wins can have a big impact on our investments. Like for example, our Malaysian semiconductor business is actually a downstream manufacturer for the US tech companies. If you haven't checked out my previous video on the policies favored by the parties, do check it out. It's a must watch for beginners. But regardless, if Kamala Harris or the Democrats win, the blue team, they tend to favor liberal policies, which means a larger role for the government in the economy. Basically, more social welfare programs like Medicare expansions or stimulus checks for the unemployed, and higher taxes on the wealthy to reduce income inequality and support the poor and the middle class. So, three sectors stand out as the favorite. First up is clean energy, an almost obvious winner if the Democrats win, since they have been pushing green energy with tons of investment during their tenure. And not just that, they often propose large-scale plans like the Green New Deal with an aggressive target to expand existing renewable power sources to eventually meet 100% of the US energy needs. And they are also well known for publicly going against oil and gas subsidies, and they have implemented tons of tax incentives to benefit the clean energy sector, such as the production tax credit, the investment tax credit, advanced energy project credit, the 2023 clean energy tax credits for electric vehicles, and so many more. So because of that, companies that either produce renewable energy or build the infrastructure for it, or whoever that manufactures the electric vehicles and its charging infrastructure, etc., those are probably the main benefactors. And so under this sector, ICLN ETF will be a top choice as it tracks global renewable companies under the clean energy sector with a 0.41% fee, which is pretty standard for a sector-based ETF. Its historical return might not be that pretty, no thanks to the ongoing subsidizing of fossil fuels, but given how interconnected the global supply chain is with the US tech giants, this could just be an undervalued sleeper that no one discovers just yet, because energy, like it or not, is still the fundamental for every nation. And speaking of fundamentals, one of the basic needs of humanity, if it's not energy, then it's healthcare. Specifically, affordable healthcare for every layer of the society. And obviously, this agenda helps them to garner more votes. The Democrats are proud of the Affordable Care Act, or better known as Obamacare back then, which expanded healthcare, reduced costs, and then made it accessible to millions in the US, regardless of their background. And since 2010, the number of uninsured Americans have dropped significantly from the high teens to now just below 10%. So Vanguard's VHT ETF comes into the picture because it is one of the cheapest passive ETF tracking the US healthcare sector, with big names like Eli Lilly and also United Health Group making up almost 20% of its total weightage. Historical returns have been pretty decent as well. As you can see over here, it has definitely benefited since the Obamacare bill has been signed into law in 2010. Now, another sector that I think will benefit greatly from the Democrats winning will be none other than the consumer discretionary sector. Basically, goods and services that people want but don't necessarily need, like shopping on Amazon, Home Depot, or even buying a brand new EV like Tesla. It's simple. Democrats tend to tax the rich and then give stimulus checks to the middle and lower class, which puts extra money in people's pockets, which means more spending for shopping. Hence why the Vanguard's VCR ETF is, in my opinion, at the best spot to capture this trend. It's low cost and have a pretty strong track record thanks to its heavy tech weightage. And with the US Fed further reducing the interest rates for the foreseeable future, which means cost of fund is going to go down further, you can only imagine where the extra money is gonna go. Quick pause, this video is sponsored by Seeking Alpha, my go-to platform for stock and ETF research. It's loaded with valuable insights and perspectives from independent authors, helping you make smarter and more informed decisions with your money. And on top of all the important market data ranging from stock index, sectors, bonds, earnings, calendar, and all the breaking news properly categorized to let you read at a glance, you can also compare the ETFs I've mentioned today with their peers so that you can find the perfect one that suits your investment goals. Feel free to use my link down below to get $30 off your subscription and start your free trial today. It's risk-free and you can cancel anytime during the 7-day free trial. That to me is a testament to their confidence in their platform. Alright, back to the video. Now, contrary to the Democrats, if Donald Trump or the Republicans win, they tend to favor conservative policies and, as you guessed it already, a smaller role for the government in the market, as they believe in a free market without excessive regulations and lower tax brackets, which will then encourage innovation, job and also wealth creation. So first off, the energy sector or oil and gas will likely benefit if the Republicans win, with their focus on reducing or even rolling back environmental regulations, famously documented under the Project 2025 policy papers written by the conservatives, because no surprise, most of the carbon emissions in the US still stem from the oil and gas industry. Basically, those carbon emission standards, air and also water pollution regulations that have long been a pain for the fossil fuel industry. It's been long championed by the Democrats. But we could see a 180-degree swing if Trump wins this round, and they are likely to cut financing and also investments for the clean energy sector. And on top of deregulation of the industry, the Republicans also support more incentives for fossil fuel exploration, production and also development, which will result in more cost savings and investments for these companies. So as you can see here, they would do whatever it takes to spur the US oil and gas industry. So yeah, if you're into all stock and think Donald Trump might win, what can I say? The VDE ETF is a great pick for that sector. Next up is the defense sector, which takes up over 13% of the 2023 US federal budget. If the Republicans win, expect this sector to thrive, and that's because the Republicans traditionally favor a stronger military strength, and they believe that it is necessary for them to beat China in a potential conflict. I mean, just look at their official defense budget overview, which is a public document by now. They did not even try to hide the fact that they recognize China as their key strategic competitor and facing challenge, right on top of Russia. And all of this is on top of a potential $2 trillion multi-year plan for the US to build a new generation of nuclear-armed missiles, bombers and submarines. And a large chunk of that funding will go to weapon contractors like Bechtel, General Dynamics, Honeywell, Lockheed Martin and also Northrop Grumman. And guess what? Most of the names I've just mentioned are actually companies held under the ITA ETF by iShares, which basically focuses on the US aerospace and defense industry companies. It's a little pricey in terms of its fees at 0.4%, but in my opinion, it's still a very solid choice if you want to capitalize on the potential gains from this sector. Now, one last sector that you probably did not see coming up as a potential beneficiary if the Republicans win the White House, and that is the financials sector. Two main reasons. One is the potential rollback of the Dodd-Frank Wall Street Reform and also the Consumer Protection Act, short for the Dodd-Frank Act, which was previously introduced after the 2008 financial crisis to prevent banks from excessive risk-taking, especially on those that are huge enough to be labeled as systemically important financial institutions. And this regulation was dubbed as one of the most significant US regulatory reforms since the Great Depression. And of course, Donald Trump did not sit well with this because traditionally, like I said earlier, conservatives like himself or the Republicans believe that excessive regulations that restrict lending and also banking processes will eventually stifle innovation and also economic growth. Of course, this is debatable. We have seen how much damage a loosely regulated banking system can do during the 2008 subprime mortgage crisis. Anyways, number 2, if the financial sector has less stringent regulations, it will also be easier for individuals and even businesses to obtain credits and loans. And there will also be more M&A activities, which will also encourage a huge influx of foreign investments. So you can think of winners like banks, investment banks, insurance companies, brokerage firms, etc., etc. And all of those are captured under Vanguard's VFH ETF. Basically, the one-stop low-cost ETF to gain broad exposure to the US financial institutions. So there you go, here's an overall look of the entire table, and if you notice a pattern, I've actually cherry-picked low-cost ETFs from trusted fund managers that tracks the intended industry and also their underlying assets. And yes, historical returns could be used as a general indicator of the past performance, but remember, these are sector specific, so it can skew very one-sided depending on the outcome of the US election, and if certain policies that we've mentioned earlier will be implemented or not, either partially or fully. So just be very mindful on that. Every investments do come with risk, and political uncertainty is surely a big factor over here. So one last thing to point out over here, the risk assessment. Beta measures how much a stock or ETF moves compared to the overall market, like the S&P 500. If it's over 1, expect more up and down. Under 1, it's a bit more stable. So both ICLN and also VCR ETF have higher beta than the rest because the former is closely tied to how the government shapes the climate policies, and the latter is cyclical in nature and tied to how the economy is performing. But more interestingly, the 3-year Sharpe ratio, which tells us the risk-adjusted return. Higher is better because it means more reward for less risk, and surprisingly, the 3 Democrat-favored sectors show relatively lower Sharpe ratios, which could suggest only, either their policies are not that friendly for corporate profits as compared to Republicans, or that they were not given enough time to fully perform yet, at least for the last 3 years. Alright, let me know in the comments down below who do you think will win the US election. If you want more perspectives on other potentially politically driven stocks and ETFs, Seeking Alpha has all the analysis available on their platform. So do use my link down below to get $30 off, and feel free to cancel anytime during the 7-day free trial. Thanks for watching.